Okay, today we are going to cover over the sixth and final video in this series that I've put out. We are going to discuss things like the what to expect at closing and what to expect after you've closed and take possession of your home. So if you have questions, stay tuned and hopefully I'll get them answered for you. Here we go. Okay, so we've gone through everything, basically like a rough outline of what you can expect from start to finish. And this is going to be the final video, the quote unquote finishing of the mortgage process or the home buying process whenever you're financing a home. So, what we're going to cover today is the basically what to expect at closing and what happens after your loan is closed and you take possession of the house and things you should look out for. So the first thing that we should talk about is it's closing day. What should you expect? Well, some of the things that should have been done either first thing in the morning of the closing day or maybe even a day or two before, the very first thing should have been is you should always send your funds to title. So, for your down payment, your estimated closing costs, that's something that you can't just walk into the title company with a check for, or obviously you can't bring cash into the title company. They won't accept it. So typically you have to wire that amount directly to them. So it's always good to get with your lender, make sure that the final numbers are the actual final numbers. They should already have docs to title by, with a few days before closing at a minimum. And so you should know what those final numbers are. And it's just a matter of contacting your bank and figuring out what they require for you to actually send a wire. There's a lot of banks you can just do it over the phone. Some banks you can even do it online, but there are banks that do require you to actually come into a local branch. So that's why you always want to make sure you've got that process covered a few days before your closing, so there's no hiccups. The last thing you want to do is get to title the morning of, sign all the paperwork, and you're waiting around for a day or even getting your closing delayed because your bank hasn't wired the funds to title yet. So like I said, it's always good to get it done a few days before. So once you've wired, the next thing that you can expect is a trip. One of two things typically. It's either going to be a trip to the title company itself. You'll go to, just depending on what state you're in, it's either going to be a title company or an attorney's office, and you go directly to them. And what will happen is the lender has already sent all of the paperwork that's required for the loan. And what you do at that point is you go into the title company or the attorney's office and you review the paperwork, you sign it, and you notarize, the attorney or the title company notarizes it as you sign it. Now, some of the things that you want to keep in mind whenever you're signing the paperwork is to make sure you sign the papers identical to how your name is on them. So if it's your first and last name, sign it with your first and last name. If it's your first name, full middle name, and last name, sign it that way. That way there's no hiccups. And make sure that the signature is the same all the way through the documents. Sometimes it can, just depending on the lender, there can be hiccups and you don't want to have to go back and re-sign paperwork just for something because a signature isn't consistent. So that's one thing to look for. And by this time also, you should have, if your lender has done the correct homework for you or really prepared you for the closing, they've already gone over everything. So all the numbers have been gone over, the interest rates have been gone over. It's all just a formality at this point if it's been done properly by your lender. So that's something that whenever you go in, it shouldn't necessarily take too awful long. And the good news is, even more recently in the past few years, there's been a lot of this that is actually done through e-signatures. So you'll even get some emails and you'll be able to DocuSign, some of these documents, if not all of them. It just depends on the lender. There's several lenders out there like like us that actually go and we can do a full e-signature on the closing docs. Now, there's a couple of things sometimes that need to be signed, quote unquote, wet signed, so an actual physical signature on, but it just really depends. Um, then once that's all done, it doesn't necessarily mean that you get the keys handed to you immediately. So once the loan documents are signed, they actually get sent back to the lender. The lender has to quote unquote approve the loan package. And then once the loan package is approved, the lender goes through what's called a funding process. So they want to go ahead and just depending, they go in, they either send the funds directly to title for the loan, or they just give, or they've already sent the funds to title. And what they do is they give an authorization to the title company to go ahead and release the funds for distribution, and it basically closes the transaction. Now, once the lender has gone ahead and sent authorization to title for, it's to release the funds, title still has to have enough time to get your loan documents to the county office. And this is typically done electronically, but they still have to have time to get your loan documents to the county office so they can record and be official. Once the recording happens, that home is yours. You can take possession of it per the purchase contract, and you get your keys, and that's your home. So there's a lot of people think that, as soon as you sign the paperwork, or as soon as the paperwork sent to title, that it's yours. But there's still a little bit of a process that you have to be aware of. Now, once you've closed, obviously, hopefully you're starting to move, you're getting, your address forward set up, you're getting your utilities set up. Remember, you need to always get those done. But one thing to remember is, when is your first payment due? Your first payment due on your loan isn't necessarily it's never the first of the next month. So like, say you sign on the 15th of the month, and your loan, the first payment, fortunately, is not going to be due the first of the next month. You actually will skip the remaining 15 days in the month, and then you will also go ahead and skip the entire next month. So if you sign on the 15th of the month, your loan first payment isn't due until the 15th or the 1st of the following month. So for example, you sign on January 15th, your first payment isn't going to be due until March 1st. So just keep that in mind. This is what I'm trying to say. But another thing to keep an eye out for is some of the mail that you're going to start receiving. There is going to be a ton of mail. So, for example, whenever I bought the current house I'm living in, I used a VA loan. Well, literally, as soon as I moved in, within probably 30 to 45 days, I started getting tons of junk mail that portray that they were my lender, basically just trying to get me to go ahead and give them a call so they could have an opportunity to refinance me or to resell me. You really want to stay away from these types of solicitations. Most of them are very dishonest, just to say the least, because the way that they make their money is they are going to try and refinance you. But what they do is they charge you higher closing costs. They can charge you a whole bunch of points to try and buy down the rate. So it makes it look like say your interest rate is 5%. Well, what they'll do is they'll send you a mailer that says, hey, if you refinance with us today, we can get you down to 3.5% fixed for 30 years. Well, why not? That sounds great. I just bought the home. Why not go out and do it? Well, what they don't tell you is, to do that, it might cost, $10,000, $20,000 in lender fees to be able to buy that interest rate down. And in another video, we'll talk about how interest rates work and how you can buy them down, or how you can get credits, just depending on what type of interest rate you go with. But what that like say you go from 5% down to 3.5% and it costs you $20,000 to do it, it could potentially only save you, just depending on your loan size, it could maybe save you $100 a month. And $100 a month isn't nothing to shake a stick at, but how long is it going to take you to recoup that $20,000 at $100 a month savings? It's going to take you quite a long time. I mean, you're talking what, $1,200 a year. So it's going to take you, 20 plus, basically 20 years to recoup that money, because you're only saving $1,200 a year. So, just want to keep, you just want to be very aware of the junk mail that you receive, because it is something that a lot of people do tend to come after you with. But that's it for this series. This is the 6th video. Like I said, I hope you enjoy it. There's going to be tons of more videos out. If you're viewing this in a year down the road, from now, then obviously you can already see the tons of videos. But in the meantime, if you ever have any questions, I'm here. I'm happy to answer them. I don't, I'm happy to answer them for free, whether you do business with me or not. So I just want to thank everybody for taking the time. If you can, please subscribe to my channel, like the video. It helps with everything. And remember, stay keen on home loans, and we're here to help you. Talk to you soon.